I want to get over to Jared, who has a closer look at the volatility index, which is just going bonkers.
Yeah, we're looking at the VIX right here. This is a 3-month candlestick chart. We can see this huge acceleration to the upside. We hit nearly 80. These are levels that we haven't seen since the GFC, the Great Financial Crisis. But there are other ways of looking at volatility here. Not shown, we can look at the futures term structure. And if you look at, for instance, the second month versus the 8-month is a common spread that people look at. It's blown past anything we saw during the Great Financial Crisis. So it just gives you an idea of the severity of the situation. When we were down here trading at 11, 12, people were talking about the complacency in the market. Now we have the exact opposite. And we'll just take a look at our heat map again. This is going to be the NASDAQ. Quotes are coming in a little bit slow as our own system might be a little bit jammed right now. But we were seeing some of those stocks like Facebook that hadn't opened up before. They are now open. Last I checked, Facebook was trading down about 12%.
Tim, the head of New York Stock Exchange, Stacey Cunningham, telling Yahoo Finance this is a, quote, unusual market right now, and also, quote, this is a very anxious market right now. And to me, that does not sound like a market near a bottom.
No, and that's why I said these things are it's going to take a long time. And one thing that's kind of interesting, if you go back historically to 1900 and look at, we have a list of cyclical bull bear markets, and we can look at these markets. I think there've been about 35 cyclical bear markets since early in the decade. And if you look at it on an annualized basis from high to low, and it's going to remain the case after today's action, but the market's actually been down 99% per annum. In other words, this has been the biggest, the amount of time it's taken to go from where we were at record highs where we are today has happened very quickly. So, like I mentioned this earlier about 2018, the market at the end of October, that's when we previously saw this kind of a spike in the VIX, as was just being addressed. And then the market continued lower until March with a lot of volatility until you had the final low. Now, I don't know if this will happen. Maybe things are more compressed here, the result of algo trading and ETFs and the information flow and a lot of things that maybe would make the turnaround happen sooner. But our approach to it is wait till you really get the pendulum swing where the breadth comes back. We have what are called breadth thrusts. What this means is you get the broadening out, where you get the kind of opposite type of numbers that we've been seeing here recently to tell you that actually it's safe to get back in. So I definitely would not try to pick a bottom here. Our approach has been stay with Treasury bonds. Yields are continuing to move lower here. And, that's a safer place to go until we have really strong evidence that things are turning around.
Guys, if you take a look at the 30 Dow stocks, of course, all of them are lower across the board. And leading that decline, American Express down 18%. JP Morgan Chase down 17%. Boeing, which is an airline, related to the airline industry, down 18%. Andy, I'm going to toss this one to you.
And that's today.
And that's exactly
right
those
now.
are today numbers.
That's right now.
Right. Good distinction.
That's down 17 and 18%. In this morning's
the matter
trade.
of just a few minutes of trading. Also, Nike lower as well. I think if you take a look at the stocks that are lower right now in the Dow, it sort of tells the broader story, right? Because you've got banks and you've got retail stocks and airline-related stocks hurting the most.
But also, when you're talking about blue chips like Amex, then you're talking about people not only who want to sell, but people who have to sell, it sounds like. And so we're going to start to see some real pain on Wall Street by some financial players. What hedge funds are wearing bathing suits? We might get a little bit of that, to borrow Warren Buffett's old phrase, because, I don't know where we are, Jared, just off the top of your head, from the peak in terms of a percent drop, but we
over 30%
over
now.
30% now, and
so about around there.
So if your expectation is the market X, and maybe you can take a 10% haircut, but you're really expecting a 10% gain, being down 30%. Some people are not positioned for that.
Alexis, you were looking at the Dow 30. I'm on the Yahoo Finance trending ticker page, and what I'm seeing is it really is unprecedented. Bank of America down 16%, JP Morgan down 18%, Amazon 8%, Starbucks down 15%. These declines, these are blue chip companies. Obviously, the banks are getting pressured because of the rate cut. But Matt, right now this morning, these type of declines, do you get the sense this might be that last whoosh or the full-on capitulation?
Well, I am to a degree, but I agree with what your other guests have been talking about. Is that it's usually a process. We don't get. I think this will be something you do not want to be shorting here, because I think you could get a very sharp bounce. We always get sharp bounces, and again, maybe this will be more compressed than it has been in the past. But you always get several sharp bounces whenever the market drops more than 20%. And we got one on Friday that was 10%. I think we'll get more of those, and I do think that that over time, there's a lot of things to worry about. So when I'm talking about the situation, again, I was bearish going into this. I'm getting a little less so because I just hear the panic in people's voices today, and I see the action in the marketplace that we could see sharp bounce. But longer term, I mean, we don't have the same situation in the banking, U.S. banking system that we had a decade ago. But boy, the European banks really do not act well. They did not deleverage themselves anywhere near as much as the U.S. banks have. So down the road, and I say down the road, a couple of weeks, maybe a couple of months from now, we could have a banking crisis, not necessarily in the U.S. So there are some reasons to not want to step to the plate in a major way. Traders, I think, can buy some sharp bounces here and there. But again, this is going to be a process. People need to be very careful and very nimble.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.